Welcome back to the Broker Power Up podcast, the AIME podcast with strategy, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathon and Haddad. How are you?
Good, man. We just rolled out the committees a couple days ago, so that's been going really, really well. And just staying focused, waiting for warm weather over here in Michigan. I know, same for you out in Jersey.
We had a tease. We had it for like 2 days, and
Dude,
now I'm back in my hoodie.
I'm done. Tommy, I'm so done. I'm not kidding. I woke up today. I had breakfast with my agent, Justin, today, and I got up. And I'm like, all right, let me just get prepped. I walk outside, and it was just freezing. And I was just so annoyed.
Yeah,
that's it. I'm just done being annoyed, Tommy. I just don't want to be frustrated with this cold weather. But God willing, we will see the sunshine.
We have to be soon. We have to be close. We have to be close. It's gonna be May. But we have a lot going on today. We have the Broker Buzz, where we dive into the top posts of the week from the Brokers Are Best Facebook group and discuss what's trending, what's working, and what you need to know. Then we're going to go into some sales pitch training and a story all in one, which is going to be super fun today. But first, as we start every podcast, we got a fortune cookie. And today's fortune exploded. And we have a loved one's guidance leads to prosperity.
One more time.
A loved one's guidance leads to prosperity.
A loved one's guidance leads to prosperity. What do you think?
So where I'm at on this is, I won't get into it, but we've been dealing with some family issues external to my immediate family, not my partner and I, but close family. And I have taken the role of this week of just really tuning in and listening more and just being there more, present in the moment more. And I've learned to pick up signals, not that I haven't before, but just been a lot more conscious to have her guide me to what she needs without her telling me, if that makes sense. Like I can just, if I spend more time next to her and more present, then I can figure out things like, oh, let me go make you more tea. Oh, do you want a snack? Oh, like just little things that I can do to make the day a little better. And that's prosperity for us because we're both happy.
I like that.
That's how I take that.
For me, for this one, it's, I started thinking about just somebody believing in you. You know, that's there's a saying that talks about it only takes one person to believe in you and you can change the world. It was one of my mentors, Piazza. He always used to talk about that. You know, be that one person for somebody, be that one person for somebody, be that one person for somebody. And so for me, just I don't think about it as like a loved one per se, like one specific person. Yeah. It has a lot to do with just so many different people that pour into you. And, you know, you got to do the same for others as well. Pour back into other people. You'd be surprised. You know, people tell me all the time, John, you shouldn't always pour into people. You shouldn't always pour into people. Like it's a waste of energy. Not everybody wants it. And you know what's fascinating about that? It is true. Not everybody does want it. It really is. But Piazza used to always tell me, and it stuck with me forever, when that one person does figure it out, God, it's worth all the other people that don't. It really is. Like their face, what happens to their life, their family, their finances, everything about them changes as an individual. So for me, you know, if it takes 100 people to find that one unicorn that is ready to make a difference in their life, then that's worth it for me. I don't mind batting 1 out of 100. I just don't in situations like that because the reward is just something you can't describe. So I've been really fortunate in that sense. And so that's what that one means to me.
Oh, absolutely. Yeah. Loved one does not need to be a significant other. It can be a close friend. Anybody. Cool. Well, let's dive into the Broker Buzz with our first question. Hello, everyone. I have a client looking to purchase over 200 homes in a portfolio with DSCR. Anyone out there that handles this kind of volume portfolio, approximately 21 million in total purchase price. Now, this one stopped me because I was like, wait, this is a thing people do? This is crazy.
Yeah, so these are like either portfolio loans or you'll some people will say it's a blanket loan. So
Okay, I've heard that before.
portfolio is specifically my portfolio. So I'm going to somebody and we're adding it to our portfolio. The guidelines are what me and you agree upon. So if Tommy's borrowing from Jonathon Haddad's portfolio, our agreement is our agreement. And if we have a $21 million agreement, that's what happens. So those are real. Those do happen. There are people with that kind of money. There are people that like that kind of risk and make tremendous amount of capital doing it. A blanket loan is basically one loan that a lender will cover, but it'll finance everything all at once. So you'll generally see, if they want to get 4 properties at once, you'll get a blanket loan. That blanket is a blanket per se that covers all 4 of those loans under that one blanket. So multiple different areas here. For something like this, you're talking a lot of complexity. You're talking $21 million, 200 homes, and just so much due diligence and work. Like, you're entering the space of commercial here because of the amount of due diligence that's required on this file. So, and look, what I say next, nothing to do with you. It's just more so me being curious. Is this person a savvy investor? Like, do they know what they're doing? I'm going to assume yes, because they're calling you for 200 homes for $21 million. That's not just a random call. You have to think through that and have conversations with family. But are they savvy? Do they understand the business? Do they have friends with this money? Have they done something like this before? What have they done in the past to get that financing? Do they know somebody that's done something like this before? Like, the investor buying something like this should also have a bit of a background on this massive of a purchase. So I love to ask those questions. But from something like this, you got to find private money all the way through a portfolio loan, or some of your massive like credit unions might even play around with something like this. But just think about the complexity and how much goes into it. I do hope you find your success on this. I would look around, I would ask around, post in the groups, but you're going to need somebody with tremendous amount of capital willing to take on a risk like this.
Yeah, that's no joke amount of money.
No.
So, moving on to our next question. Hey, all whom have processors. Does your processor structure deals for you, or is it the LO's job to structure and submit to the processor with an AUS approval? I am curious how much your processors do.
Look, LOA, no, like, if they want to price, okay, like, I'm comfortable, they're licensed from that perspective. But even for me, if I'm speaking just about me for a second here, no shot. I'm just not allowing that, because that's not on the processor. And here's why I say that. If something goes wrong in that file, are you then going to blame the processor for something that you're supposed to do? And that's where it goes wrong a lot of the times. Now, if you don't blame that processor, if you have a very good working relationship and you communicate and you like certain things, and that processor's licensed and has the right to structure and do that, yeah, I could see that happening. But I cannot tell you how often the LO, if something goes south, now wants to blame the processor. I don't like that personally. It takes off accountability from me. So when it comes to pricing or anything of that nature, that's me. I price. Personal preference. I don't want anyone else pricing for me. I would have LOAs. I actually do have a couple people I trust that price just like I do. Gabby, Chris Fava, few people that work with me, but they understand how I price things, how I do things, how I operate. So for me, a processor, the answer is no every single time. LOA or somebody of that nature, I would allow, but processor, allow them to do their job, which is to process. That's it. Allow them to process. Don't make them, also don't stress them out. You want them now having to dive in and price and figure out, like, now they're stressed out and now they're being slowed down doing the rest of their job because they're sitting there for an hour pricing something out. And now they're asking you questions and you're trying to figure everything out all at once. So I would stay away from that as much as you can.
Almost like different roles.
Mm-hmm.
And our last one. Looking for creative ideas. I'm donating a basket for a fundraising auction at my children's school. I would like to make it home themed. Not sure a mortgage themed basket is possible. If anyone has any fun ideas, please let me know.
So, Tommy, would love to pick your brain, see what, like,
yeah,
just from your side, how you look at this. So, for me, some of the cool things you can do are hangout baskets. So, what do I mean by that? Like,
that's
you can
where I was going.
Oh, really? So, yeah, you could do a backyard hangout basket, for example, a date night hangout basket, a spa hangout basket for the night. So those themes always seem to work really well with people from that perspective. So if you want to keep it home, I mean, just anything inside their home that they can do a hangout, for a dinner where literally the groceries, they deliver them, they have the instructions. Dinner
Mhm.
date night, like, do you love to cook? Dinner date night's a blast. They bring it over to the house. You have to read all the instructions. You go through, and it's like you're cooking a gourmet meal. So there's so many different things you can do, but that's the path that I would recommend. Tommy, I hope I stole your thunder there, but that's the
No,
first one that
no.
came to my mind.
Similar path, but almost like a home movie night where, like, I don't know if you can get like a Netflix subscription or some kind of like Google Play or something to be able to Amazon Prime, maybe, I don't know, to rent a movie, some kind of gift card or multiple movies, and then like a bunch of theater candy and popcorn and stuff like that. Or maybe, like you said, like outside, like a blanket and like a little picnic kind of thing. Like actually, you instead of just getting like an open basket, getting a picnic basket and filling it full of just picnic related things. I'm assuming like if you're bringing it to the school, you can't really have like perishable things.
Yeah,
So that's
probably.
why I'm kind of leaning towards that. Or, but uh, yeah, I mean, it would have to be if it's a home related thing, it's something at home. And if cooking is hard because of the perishable thing, then either lean into like a movie night at home or even like a puzzle or like something to get the family to come together, like a puzzle with a bunch of snacks or a new board game or something like that, something that a family can do together. Because I'm assuming if you're bringing it to a school, the people that are auctioning for this basket are probably a family. So it's something that a family can do together, and I wouldn't make it age restricted. So something probably pretty simple.
Thank
But
you, sir.
of course, if you want your question answered on the Broker Power Up podcast, be sure to be an AIME member and be in the Brokers Are Best Facebook group. If you are not, you can scan the QR code, and we will be back on the other side of this ad with sales pitch training. We'll be right back.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first, couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com /membership. Your community is waiting.
And I'm waiting to become a better salesperson. John, what do you got?
All right, my friend, I got some data here to showcase our community. So what you're looking at is I pulled some HMDA data. It's just starting to get released from last year. We AIME partnered with a company. They're called Polygon Research. We've been partnered with them now coming up. This will be our third year that we're going to renew our partnership. And they do just such incredible work maintaining, organizing the HMDA data that comes in year after year. Obviously takes tremendous amount of time to go through it, but I always like to focus on cash out refinances. And it's a point I've been getting across to our community now since I've taken on this role because of just how much time I spent in this environment in the retail space and how I was taught to do it. So what you're looking at, this is first lien cash out originations in 2025. 660,861 total transactions occurred. Of those, 479,000 were done by retail, 162,265 were done by broker, non-del, and then 19,596 were done by other. That's like your credit unions and just your other little array of lenders that fall under that umbrella.
Would hard money be under the other or no?
I don't know if hard money does not report HMDA data. HMDA data is specific to the residential transactions in this specific instance that they're looking at. So that would not report.
What is HMDA data?
HMDA data is a collection of all the data it takes when it comes to a mortgage application. So they can see everything about the file. They could see like how much in points were charged, how much in fees were charged. There's specific things from the closing disclosure that's disclosed when it comes to HMDA data. And so this is how you can get a good interpretation of like what the rates were, what the closing costs were, all the different things that occurred on this specific loan. So HMDA data encompasses so many different data points. And so they really break it down. And if I showed it to you, it would blow your mind how many different extensive data points by lender, specific to their default rates, applications, VA, FHA. It's very intense. But in this instance, last year, retail originators did 479,000 of the 660,000 cash out refinances that occurred. Mortgage brokers did 162,000 of those. So why does that happen? Why, Tommy, if you had to guess, and Tommy has no idea, I was going to ask him this question. Tommy also doesn't have the background in retail. He knows the broker space because he's been in it now for some time. But Tommy, if I were to ask you and just guess, why would you think retail does so many more cash out first lien refinances than our community?
Because they get in front of them more often.
Okay, and he crushed it, right? So it was that simple for him. But I want to really give you context here on what this is. So this is about not prejudging. And I want to tell you a story when I first got into the industry. And I was talking to a consumer on the phone, and my leader at the time was listening in on my call. And we did a lot of that. I've been coached on a lot of calls. I've coached more calls than I could possibly imagine. But I'm talking to this consumer about his life, and he's just telling me, like, it's a good setup. It's a good profile. He's got a good deal on his home, and his rate's good. And he makes good money and all this stuff. And I'm like, all right, let me just get off this phone call. Well, my leader sees I'm trying to get off the call, and he goes, pull credit. Like, it doesn't make sense. I'm not pulling credit. He's like, pull credit, screaming at me. So I'm like, hey, you know what, Mr. and Mrs. Client, why don't we just take a look? It's a mortgage review that you and I will go through. Make sure you and your family are in the best spot possible. Even if this doesn't make sense, I'll tell you up front. And that way you can go on and rest easy knowing that you are in the best place for you and your family. Anyway, we go back and forth. Client says, okay, pull my credit. I pull his credit. And when I tell you, I look at the mortgage and it says balloon on the credit report. And I'm like, balloon? So I start talking to the client. Yes, he was in a balloon payment. And that balloon payment, yes, he had a great profile. He had great credit, but that balloon payment was coming due. And so finally I start attacking. My leader sees it. He's like, oh, wait, hold on. We start having conversation after conversation. A couple weeks of follow-up occur. Client does the deal. And that was somebody I was going to get off the phone. And so I share that with all of you because when I talk to a lot of our broker community, a lot of them say, oh, the loans just don't make sense. And so then I ask them, did you ask the client? Did you pull credit? Did you make the call? Well, no, I didn't pull credit because I had their last file. It didn't make sense. That last file is a year ago. Tommy, how much has your life changed in the last year?
I can tell you quite a bit.
How much has your life changed in the last 6 months?
Quite a bit.
Okay, my friends.
Not everyone in 6 months, but yeah, I agree. I'd say the majority of people are in a different place every 6 months. Not
every 6 months,
but in there.
That's my point, man. And so to me, it's like, make the call. So that's the first thing you have to do is make the call and pull the credit. Do not prejudge, pull the credit. The second thing that I was taught to do that is not talked about at all. How many of you know what effective interest rate is? So it's calculated very different. Effective interest rate is the interest that you're paying on all of your debts. And that's calculated differently based on installment and revolving debt, because installment debt is actually paid down. Revolving debt revolves like a door, revolving door. It never stops. So that interest could stay there for God knows how long if you don't do anything about it. But that calculation for effective interest is a different calculation when you add revolving debt interest versus installment debt interest. Do you know how to do that? How many loan officers out there know how to do that and have that conversation? A lot don't. And we're not spending the time learning how. So when I pull a client's credit and I'm going through the profile with them, I look at their credit report and I see maxed out credit cards. I talk about it. What's the rate on that card? Oh, I'm not sure. No problem. We'll reverse math. We'll figure it out together. They're paying 15 to 25%. So let me ask you this. The goal in life is to pay the least amount of interest possible. It's one of the goals, right? It's one of the goals. Don't overpay in interest. It is a real goal. Don't pay in interest. It's even written in some religious books about not paying interest. That's how serious this has been. We're talking thousands of years ingrained in your DNA, taught to not pay interest. So when I call a client and I see that they have $10,000 credit card maxed out, $7,000 credit card maxed out, then I see they have this random personal loan that they took out. And now I see they have $45,000 in debt, revolving debt with 23% average interest. Yo, that client's not paying that off. They're not. They're just not. It's not about to just stop. And so if you're paying all that money on that debt, and then your house, you have $200,000 that you owe, that you have a 4.5% on, do you really care about your 4.5% if you're never going to pay off your $45,000 in interest that's just sitting there accumulating debt that you can't pay down as a consumer because the economy is not in the best place possible? Many clients are in that boat, but if you don't know how to talk to them about it, you're going to hurt yourself. So the second thing you need to learn how to do is work with effective interest rates and learn how to have that conversation. And the last thing you need to do, you need to not be afraid to call out consumers when they are saying things that are not truthful to what they're actually doing. So what do I mean? So when you pull credit on a client, we use Advantage Credit. Shout out to Advantage Credit, incredible AIME partner, my friends. If you're not part of, shameless plug here. You get $3 off your credit pulls with Advantage Credit through AIME directly. But we use Advantage Credit. So I pull on Advantage Credit. I'm talking to Tommy right now. Okay. Advantage Credit has a button. Most credit companies do. It says Display Trend. When you open that button, it will show you if Tommy has ever paid extra on his credit cards for the last 12 months and how much extra he pays. So the last thing that I said is call out consumers. So what I mean is, hey, Tommy, I'm looking at this Discover card you have here, and it looks like it's maxed out. What is your game plan to pay that down? I've had clients like Tommy tell me, well, you know what? I'm actually paying extra monthly right now, and I'm really starting to hammer that away. Tommy, hey, I part of my job is to make sure that I'm looking at the entirety of the situation. And from my lens, what I'm seeing when I look at your credit report is over the last 12 months, you've only paid extra twice on this credit card.
Well, I'm going to do my taxes and I'm going to get my tax return, and then I'm just going to pay it all off then.
And Tommy, so let me ask you this question. Is this the cycle that you constantly want you and your family in year after year, where you're depending on your taxes to pay off debt?
I mean, it's not ideal.
And that's exactly what I'm trying to get across. Is it's not ideal. And in order for things to change, we have to rip some Band-Aids off. We can't just sit around and wait for tax season every year. And I know what I'm saying is coming across as harsh, but the reality is we're talking about your finances. And I don't think me necessarily being nice to you all the time is important. I do think it's important for me to be kind as I explain this process, but you depending on tax returns every single year to pay this debt off is a cycle that we can agree you want to get out of. Is that fair to say?
Yeah. I mean, math is math.
And so, y'all, but this is the conversation. And are you pressing? Are you having these difficult conversations? Are you calling consumers out respectfully? So a good friend of mine, he talks about this all the time. He says, never be nice, always be kind.
I like that.
And I loved it because he's right. Like, you don't want to be nice to everybody. Not everybody deserves your niceness, no. Right? But you should be kind to everybody you cross. Hey, I can be stern and kind. I can be direct and kind. I can be loving and kind. So I love that saying, and it's the same philosophy I take with my clients is I don't want to be nice. I want to be kind to you. And sometimes being kind means what? It means I got to tell you things that you don't want to hear. Being nice is, I'm not going to tell you that. You don't need to hear it. Don't even worry about it. So those are the 3 things you can do to set yourself up for success this year when it comes to cash out refinances. Don't lose opportunities. All you have to do is make the call and give it a shot, my friend. So that's the tip for today. I wanted to roll that through. Tommy, any insights on it?
I had one question.
Yeah.
You mentioned, I don't know what a balloon is. And if you mix balloon and debt together, it sounds bad.
It's really bad. So it's exactly, when you think balloon, what do you think about balloon? At some point, what does a balloon have to do?
Well, it pops.
So a balloon loan,
okay.
Even worse. So it is really bad. You are spot on. So a balloon payment is literally, okay, we'll give you favorable financing, and most of the time it's not favorable, but we'll give it to you for 3 years. But after 3 years, we're going to come and call the amount fully due. So that balloon is going to pop. And once it pops, you owe me all my money back.
So it's like but similar. What I'm relating it to in my head is a 0% credit card for 18 months or whatever. Like, where then the amounts due and then at the end. Or
even
like
worse. Even worse.
But then
you ready?
like, because
let's take that same analogy. Even worse. So this is like you going, getting approved for $100,000. They say, hey, Tommy, we're going to give you all of this money up front, all $100,000 up front. We're going to give it to you at 0 interest, $100,000. But then, Tommy, in 18 months, you're going to owe us back all $100,000. It's that bad. Like, the money you get, you have to get it. So it's not like you're just sitting on $0 and can take it out whenever you want. It's like, here's all of it at once. You owe us all this money back in 18 months. That's a balloon. It is a awful loan unless you know what you're doing. There are some advantages to it.
Sure. I was going to say, if it's 0% and
you're an investor and you know how to flip and the money's cut. Yeah, there is risk and there is some benefit to it, but a lot of consumers have no idea about balloons. You don't see as many anymore at all compared to what you used to. There are still some out there, but compared to when I used to pull credit back in the day, oh my goodness, we would see that weekly.
That's
weekly.
Terrifying.
Terrifying.
But cool. Well, anything else before we call this a podcast?
No, my friend, that is it.
Cool. Well, I appreciate everyone for tuning in to this episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor. Hit the like button to let us know you enjoyed it, which helps even more people see this content. Subscribe to our YouTube channel. Ring the bell to get notified every time we drop new content, which is quite a bit and is about to get even more. Share this video with a fellow broker who could use a power up. Remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.